Okay, sharing my screen. Good. So we were into the financial break-even point last time around, and I had told you, my dear friends, the difference between the accounting break-even point and the financial break-even point. Just giving you the brief idea about it again in a 1 minute, and then we'll move ahead with the model that we started preparing in the last session. So financial break-even point tells you that at what level of sales or at what level of cash flow after tax on a yearly basis your required rate of return will be exactly satisfied. That means at what level of sales, again in a different language, at what level of sales or at whatever the level of cash flow after tax, your PVCI will become equal to the PVCO. That means again in a different language, the level of sales where the NPV would be zero. So the interpretation of the financial break-even point is different from the accounting break-even point. That should be clear, crystal clear in minds of the people. Once that is done, then we had started preparing this model. And here I had just told you to assume the quantity. We wanted the profit figures we wanted in a positive. So accordingly, we have taken the quantity and the variable cost we had reduced, and each and every figure in this model was interdependent on each other, right? As far as I know. So accordingly, you should also be preparing the model. Number of months we have. So sales per annum is going to be the multiplication of the initial 3 cells. Variable cost percentage is given to us. Accordingly, we can get the contribution, from which if you reduce depreciation and the maintenance cost, you get to profit before tax. And in profit before tax, you should derive the tax amount. Tax amount is nothing but the tax percentage ratio is given to you. Multiply that with the profit before tax, you get the tax amount. You have got the profit after tax. But my friends, profit after tax is not the requirement of us. We want cash flow after tax. The profit after tax is different from the cash flow after tax. Can someone tell me the difference between the two? Interaction, please, from the students. The difference between the two. What's the difference between the cash flow after tax and the profit after tax? You may unmute your mic as well. You may put your message through the chat
Yes,
box too, whatever the way comfortable. Yes, Mr. Meet, please.
profit may include non-cash expenditure and in cash flow only cash expenses will be included.
Okay, that is the one difference. But there are other differences too. Though such kind of a differences we haven't taken into the sums yet. But let me tell you, cash flow may include the advance income, but profit will not be including the advance income. The income which is related to only that period will be included in the profit, while the cash flow may income the advance income you have received. Similarly, the profit would have not taken into account the advance expenses. We can also call it the prepaid expenses. Prepaid expenses are not given the effect in the profit calculation because those expenses are not belonging to that period, because accounting follow the system of accrual. The cash flow will include even the advance expenses. Even the prepaid expenses you pay will be taken into account in the cash flow. Similarly, the non-cash expense and the non-cash incomes, which might just be the incomes which would have been accrued, or such kind of an expenses which are non-cash in nature, like depreciation, amortization, etc. The profit has got the effect of it. But my friends, cash flow should not be affected by any kind of non-cash expenses as well as the non-cash incomes. So every such sort of the adjustments needs to be done. Now profit after tax was supposed to be found as well, because there is a tax amount, and tax amount is calculated on the accounting profit, not on the cash flow basis. To calculate the tax amount appropriately, properly, we were forced to calculate the profit after tax. Why I didn't calculate the cash flow directly? Because to calculate the tax amount, I was forced to calculate the profit before tax, because tax amount is based on the accounting profit. Now, as per the corporate taxation practices and laws, the exact amount of deduction you get, the exact kind of the incomes you should take into account would be slightly different. The provisions would be different. But more or less, if no adjustments and information is given to us, we may assume that accounting profit is equal to the taxable profit. But the taxable profit calculation in the real practical world happens differently. There are few more complexities of the income tax Act 1961 which should be taken into account. Some of the expenditures might not be allowed. Some of the expenditures would be allowed in advance. So all those adjustments needs to be done. Okay, so here we have got the profit after tax. Only one expense we have, which is the non-cash in nature. I'm just adding that expense, so I get the cash flow after tax equal to, I'm linking the profit after tax figure plus the depreciation, which is 475. Now this depreciation as well is calculated on the straight line basis. That means it will remain constant for all this number of years in which this asset will remain operational. Pressing enter. Now my dear friends, this is the cash flow after tax you have got for 1 year. PVCI is the cumulative amount, the summation amount of all the years putting together. Can someone tell me, if I want to find the PVCI or the NPV based on this cash flow after tax, which is the yearly in nature, how can I find the NPV now? This is only for the 1 year. The project is not going to shut down in a 1 year. There are how many years in which this oxygen plant will remain operational? 8 years, sir. Would anyone like to say something on this? Miss Aruna has left, would be facing some internet connectivity issues. Anyway, she will be joining back. Anyone else would like to say something on this cash flow after tax? How can you get the PVCI? See, we want to reach to the NPV.
Sir, by dividing CFAT by discounting factor of 8 years, total of that.
Okay, total of the 8 years. Very true. Very true. Now, see, you will not be dividing it, you will be multiplying that. Because, see, discounting factor is anyway calculated in this manner. Say you have the cash flow, then you multiplied 1 divided by 1 plus r raised to n. So whatever the figures you get over here, no, you have to multiply that with the cash flow. So you get the cumulative present value of the cash flows for all the years putting together. So my dear fellas and fellows, we'll be finding the discounting factor now. How many number of years are there? I'm just writing 1 to 8. So I'm just giving the link of the earlier cell to get 2. So I can copy this and paste it to other cells. So up to 8 I'm writing numbers here. The discounting factor formula is 1 divided by 1 plus r. 1 plus r should be there in a bracket. R is R is 16 percentage. I'm linking that cell and I'm locking that cell. I'm locking that cell. Why? Because that 16 percentage will remain same constant for all this number of 8 years. Closing the bracket, then putting the sign of raised to n. So n is the cell number F17 in my case, which is 1, right? Pressing the enter. Now you just copy that formula and drag it down. So you may check it that raised to n will get automatically changed because there is a relative reference. The cell range will get changed automatically. I'm just copying it and taking up to 8 years. Now I am taking the cumulative discounting factor here, and cumulative discounting factor is nothing but the summation of all the discounting factors for all this number of years taking together. So SUM, opening the bracket, selecting all these factors, putting together, closing the bracket, pressing the enter. Now you have the PVCI. PVCI can be the multiplication of cash flow after tax and cumulative discounting factor. We are assuming that the cash flow after tax will remain constant for all this number of years. So this is the multiplication of CF80 multiplied by the cumulative discounting factor. You have got the PVCI, then PVCO is also given to you, my friends, that is equal to the initial expense of 40 lakhs. I'm linking that cell, pressing enter. So my NPV, which is the ultimate dependent cell after all this calculation, is PVCI minus PVCO, which is coming negative. But sir, that's the negative NPV. We didn't ask for that. What was the requirement of the question? Read it again. You said that what quantity of cylinders Mr. Ronak will have to sell on a monthly basis to get the financial break-even point. So I am supposed to find the quantity of the cells per month, which I have taken 50 in my model, to such level where the NPV would become 0. Now can someone tell me what should I do to solve this question? We have used this function of Excel quite a few times for various other purposes. Interaction please. What can we do to do this?
Goal seek function.
Very true. Very true, Mr. Meet. It's the goal seek function. Everyone is very true. We would use the goal seek function. Let me use the magnifier again. Okay. Then I go to the data tab here. Then in the data tab, there is something called the what if analysis. In what if analysis, there is something called goal seek function, which contains 3 arguments, very simple to understand. One is the set cell. Now, this is the cell where you require the predefined value of something. The predefined value in our case is the NPV of 0. But NPV of 0 we require in what cell? This Excel needs to be aware about. So I'm clicking on that cell and I'm selecting the cell where NPV has been found, and that is here, this cell, which is which one? You may check the cell number of it. I'm selecting that cell 88148. then we'll again go to, now the problem with this file is that I'll not be able to find that goal seek again. Now pressing enter. Then to value. Over there, what value you require? There is some negative value you have got. We want 0 over there, right? So I'm putting 0 because that is the value we require as an NPV. And now to get this value, which cell we want to change? We want to change the cell which is the quantity sold on a monthly basis. So click over here and I'm selecting the cell which is per month quantity, that is 50. Now E3 is the cell where I have written 50, selecting that cell, pressing OK. Now you won't have to do anything, just press OK, my friends. You have got the quantity to be sold 62.66, which can further be rounded off to 63. So if you'll be selling 63 cylinders on a monthly basis, then only you will be able to get the break-even point. You may check that NPV at this level is coming 0. You may further verify that. Say it's 0. Check it out. I hope everyone is crystal clear about it. When NPV becomes 0, very true. Now NPV becomes 0, that can further be analyzed like the IRR is 16 percentage. That means whatever the expected rate you had, no, that is only the IRR is. IRR का मतलब ही है exact rate of return you are getting. Now at this quantity 63, the exact rate of return is anyway 16 percentage only because at that level NPV is reaching to 0. May I have the confirmation from the other students, please? Are we there on the track? Very
Yes,
true.
sir.
From Jalpa? Good, good. Received it from Mr. Meet. Jalpa, Purvita, you stuck anywhere, guys? Unable to see some other students right now? पूर्विता दोपहर को सो गई है. Okay, let's move ahead. Now, in the similar fashion, from this data, if I tell you that I require at least the net present value of 3 lakhs because I might be having a different project in my hand which is offering me the net present value of 3 lakhs. Then if I expect the 3 lakhs as the expected NPV, then what should be my amount of cells? Or I may say what should be my cells quantity per month? So you'll be again using the same function. Going over there in the data tab, you may go to the what if analysis again, goal seek, and in goal seek I am again setting the cell which is the cell of NPV, clicking over here on this button, selecting the cell which is this one, E19, and at the place of 0 we require the NPV to be how much? 1 lakh. Now by changing what cell? Clicking over here, sir, by changing the quantity per month. Now, whatever the cell you want to change must be independent. Please put it in the back of your mind. Must be independent. It is deriving the value from its own. It is not dependent on any other cells. So whatever the cells you want to change must be independent. Pressing enter. Pressing OK. Pressing OK. Just a second. We have got the value. That's coming around 64 cylinders per month. Is it clear? Crystal clear to all of you? So goal seek can be used when we are supposed to find any kind of the break-even points. Because in the break-even points, we have the predefined level of NPV or the predefined level of contribution or the predefined level of profit or loss, which is zero, obviously. And to get that predefined level, we'll be able to change some of the variables in our model. So goal seek function will be useful, will be utilized over there. Now, can someone tell me, if I want to find the IRR from this, how can I find the IRR from this detail? I've got the profit of NPV of 1 lakh. Now, NPV of 1 lakh stands for that my exact rate of return is higher than the expected rate of return of 16%. That is the interpretation of this 1 lakh of NPV. When the NPV is positive, that means your exact rate of return is higher than your expected rate of return, which is 16%. But if the NPV is negative, the interpretation would be exactly the reverse. That your exact rate of return, actual rate of return, is lower than the expected rate of return of 16%. Now, from this given detail, can someone tell me how can we find the IRR, internal rate of return, which is the exact rate of return? Positive NPV we have got 1 lakh of rupees. Now, that means it is more than 16% of return we have got. Then what is that exact amount of return we have got more than 16%? What does it stand for? There is a function called IRR as well in the Excel. Okay, let's just check it out. The syntax of IRR function. It contains values only, nothing else. So first of all, you must have written the values somewhere. Now values including the negative cash flow and positive cash flows. So whatever the years you have negative cash flows, put it over there in a minus. Whatever the years you have the positive cash flow, put it there in a plus. So I am for 8 years cash flow after tax. Cash flow after tax is how much? 943, 919. I'm locking that cell. So that is remaining same. I'm copying it for here because in all of these years we are supposed to get this much of cash flow after tax, and here I'm writing a minus using the thing of making cash outflow, which is 4. So which is minus 40 million. So once you have arranged all your cash inflows and outflows, then you can definitely find yeah. Here we have linked, and these cells are also linked, right? So if you will be making some changes in your earlier model, automatically the changes would occur in the IRR calculations too. So now I'm starting with the calculation of IRR here, equal to IRR, opening the bracket. Then I'm selecting the values, including the negative one, right from the first to the last one. And there is a one more parameter, which is the guess. Now guess is something which is in a big square bracket. That means it's optional in nature. It's perfectly fine. If you do not want to guess anything, close the bracket, press enter. You have got the rate of return which you have exactly got from this. Let me just increase the decimal so we'll get the exact answers here. That is 16.67%. May I have a confirmation from the students, please, that you are there with me till now?
Yes, sir, understood.
Okay. Okay. Now again, I'm putting one more task in front of you. I want IRR of 18 percentage and demand is fixed. Demand is fixed. That is not increasing further, but government has lifted the regulations on the price of the cylinders now. That means they can increase the price of the cylinder. So if I want 18 percentage of the return, demand will remain constant. Then what should be my new price? You people will be calculating this, please, everyone. Please calculate and let me know what is the new price you are getting at which you will get the IRR of 18 percentage. And if you get the answer, you will let me know by unmuting yourself or by putting the answer in chat box. Let's see how many of you have got it. No one yet. Mr. Meet, Miss Jalpa, as well as Miss Purvita. Let's see who can solve this. I want the IRR of 18 percentage and I want to adjust my price of per cylinder. What can I do? No one? Meet कर रहे हो?
Yes, sir. Doing.
Okay, good. Giving you 30 seconds more. Please do it. Okay, let me do it now. People have taken a lot of time. I don't know why. इजी तो था, कुछ नहीं था भैया. प्राइस एडजस्ट करना था और कोई एडजस्ट करना है नहीं. IRR ये वाले सेल को सिलेक्ट करना है, उधर हमें 18 परसेंटेज चाहिए. Let's go over there in the data and then what if analysis, goal seek function, Then set cell, I'm setting the cell of this, which is 16.77% of the IRR I have got, pressing enter. Over there, I require 18 percentage. Do not write 18. 18 stands for 1800 percentages. If you do not want to use the sign of percentage, then you can write 0.18. I guess that's where the people would have made the mistake. So pressing the sign of percentage there, and by changing what cell, sir? By changing the cell of price. Because here in this case, the demand is saturated, fixed, cannot be increased further. Only the price can be adjusted to reach out to 18% of goal. Clicking over here, selecting the price of 6,000, which is again the independent cell, pressing OK, and your price is getting adjusted to 6215 per cylinder. So if you increase your price further by 215 rupees from the previous level, you will be able to achieve the goal of 18% of the IRR, provided rest all the details remains constant. A confirmation there please from all of you. Is it clear? Even confirmation I'm not receiving.
Yes, sir. Yes.
Good. So that's all about the financial break-even point. Now the next session will be on the decision tree. The decision tree analysis that we have done on paper, where we had taken very few combinations. Here we'll be taking, if possible, hundreds and thousands of combinations of various probabilities. And on some, again, a bit of the realistic practical database, we'll be doing the analysis of the decision tree in the next session to come. I'll share again the Excel file in which we'll be working this. So please put your enrollment number for the day. That's it from my side as far as this session is concerned. I wanted to take you to the decision tree today, but I do not have much time left now. Anyway, we started late, 10 minutes today. You may put your enrollment number. That's it from my side for the day. Bye bye. Take care. Sayonara. Enjoy the rest of the day. See you all in the next session.
Thank you, sir.
Yeah.